Welcome back, Alpha Hunters. Hope everybody had a great week. The markets are closed for August the 4th. This week, I'm still being supportive of the bullish narrative by not changing my thumbnail. And did we start to see that bearish move start to take place this week? So let's go through it. To start the week, we had a relatively small gap up, not too much. We started out pretty positively, kind of where we ended last week. It's very much a sideways day on Monday. Not a whole lot of activity actually going on there. Very nice, strong last 10 minutes to Monday. Very nice, strong bullish action right there. And as for now, that is the highest close that we have had on the market so far this year was on Monday. Tuesday, nice little gap down, sideways basically the whole day. Not much really to say about that. And I guess that was mostly relative to what happens in the rest of the week. But Tuesday after the bell, we did get to some earnings. AMD did have earnings. Tuesday after the bell, they did do pretty good. Pretty good. Now, while AMD was announcing its earnings, one of the more unexpected events that have happened in quite some time was Fitch actually downgraded. They're a rating agency, but they downgraded U.S. long-term debt. And some of the big reasons why they did that was because they cited the past several times they've had some of these debt ceiling negotiations in the U.S. The political parties have not been aligned. It's come down to like last minute passing of debt ceiling packages. And they also cited different economic policies from one administration to another. So with that U.S. debt downgrade, the market did open lower early Wednesday morning and traded lower for a good chunk of the whole day. Had a nice little uptick there in the middle part of the day, but just rolled over in that last hour or so. Thursday had a continuation of a gap down and then got bought up until midday and then sold down a little bit. It still ended the day negative. And then we got Amazon and AAPL earnings after the bell on Thursday, which Amazon crushed, Apple not so much. Nice little gap up, retested lower, got negative, made a nice run into the middle part of the day. You had to think people were buying the dip here over the past couple days. Friday was looking pretty good until we got to the last 2.5 hours and we just sold off lower. So going into next week, expect us to go lower on the market as we did end on the weekly lows. So I would not expect us to just gap up on Monday and just off to the races. I would expect us to at least break the lows that we put in on Friday somewhat and probably even retest a little bit lower. We'll get into that a little bit later. Friday morning, we also did get unemployment rate. It did come down at 3.5%. Market was expecting 3.6%, and non-farms payrolls came in at 187. The market was expecting 200,000. All right, taking a look here at sector rotation for the week. XLE Energies doing really well for the week, actually positive for the week, and is the only S&P 500 sector that was positive for the week. All the other sectors were negative for the week. Discretionary is doing pretty good, getting a nice little uplift on Friday with Amazon earnings, and financials also outperforming the market. In line with the market, we had a few sectors kind of mixed in there: industrial, staples, materials, healthcare, real estate, and communications areas kind of all mixed in there, performing basically in line with the market. And then XLK tech getting hit a little bit, especially on Friday with Apple, AAPL actually having a kind of a bearish day there, down 5% almost. So XLK getting hit a little bit there for the week. And utilities, the XLU was the biggest underperformer for the week. Take a look at the VIX, nice little sideways action to start out the week. And then, yep, we got a huge gap up coming on the back of that Fitch news, making a run to the 17 level Thursday. And take a look at this intraday on Friday. As we hit that 17 level on Thursday, had a pretty good pullback into the middle part of the day on Friday, and then you just see that explosion back to that 17 level. So yeah, the VIX looks like it wants to go higher, so I'd be really cautious right here on the market. Take a look at the dollar, the DXY. Well, this week it continued what it ended doing last week. At the end of last week, it was pushing higher, and that's exactly what it continued to do early this week. And it actually got up to this low here from June 30th, July 3rd, and even took that out just a little bit, got a little bit over 102.8. And it was kind of the area where I said, you know what, if you're going to play this, that would be like the last stand. If it started to move up over the 102.50 level, like that would be definitely the clear cut spot to kind of drop your stop loss. Well, we saw it hit that level and then it rolled over Friday. So of course it would do that. Just go find some stop losses. But the very interesting thing here is kind of Friday, when we got the economic data early in the morning on Friday, you see the dollar just drop. And a lot of this could have been also from the huge move it's kind of been on here over the past 3 weeks that, you know what, is a little bit out of steam, kind of needed to rest a little bit. And when we're on the live stream talking today, I was kind of mentioning how watch out if this thing runs up and gets back over 102 for the close on Friday. And if it actually made it over 102.1, then that would actually set up really, really kind of bullish going into early next week. Now it didn't get over 102.1 and it basically closed right on 102. So I would expect some sideways movement early this next week on the DXY, the dollar, and watch out for this thing to continue to push higher as we go into the later part of next week. The GLD, the gold trust, nice little drop here, the beginning, middle part of the week, and a little retest there towards the end of the week. I would watch out for this thing to continue into that bearish direction. The US 10-year yield push, very nice bullish to start the week, going all the way into Thursday, even Friday. And I was kind of mentioning this over the past couple of weeks. Watch out if it takes out these highs. It did take out these past several months of highs, and really now it's kind of going to be rivaling this high that it put in back in October of 22. So watch out for that. But I get it. Friday's move on yields definitely looks quite a bit more bearish. Nice little breakdown there. So we might see some consolidation, maybe even a push a little bit lower, but yields still might be climbing here. And that recent Fitch news about downgrading US long-term debt, still haven't felt the full effects of that one. US 10 and 2-year yield curve inversion, nice little move higher this week. Little rest day there on Friday. So this thing looks like it is primed to keep going higher as we have made a higher low on this relationship and a higher high now. So it looks like it's probably going to be moving back up and eventually get into the non-inverted area. HYG, the high yield corporate bonds, man, bonds were all over the place this week. They had a wild week as we had just news all over the place. It looked pretty promising on Monday, but rates started climbing on Tuesday, and then we just saw bonds just absolutely get cratered. And the Fitch news definitely was playing crazy with bonds. So yeah, we just seen a whole lot of bond movement, and obviously you got a huge upper wick here on Friday on the HYG. So not exactly looking super good here, as all the bonds have basically broken down. And even looking here at the LQD, huge breakdown all week, and nice little retest here on Friday, basically just retesting into some previous lows. So I'd be a little bit careful on being bullish bonds. Even the TLT all week was just breaking down, huge breakdowns, massive, getting well below these lows of the past several months. Even starting to get down to like those October, November lows. So yeah, I'd be a little bit careful here on bonds, which is going to start to put pressure on the stock market. All right, I'm not going to talk a lot about earnings this week, but 3 we'll cover real quick to cover the big ones. AMD first. Earnings Tuesday after the bell. Fitch also had its surprise downgrading US debt after the bell. So that made Wednesday's trading a little tricky, as a lot of people were looking to get a little bit protective and locking in some of the gains that have been had over the year, especially in tech. But AMD had good earnings. Like, there was nothing bad. They were actually up pretty good after hours, and even early that morning they had a nice little gap up, but they just got hit and probably caught up with that Fitch downgrade. Amazon, AMZN had a nice little gap up, about 9%. It did trade up to roughly about 10% up on the day, but I'm going to zoom out here, and you can see we're kind of coming into a very nice top that we had last August. So Amazon hasn't even taken out the high from last August here, and it's just coming into that level. So it's not exactly the greatest spots to be bullish here on Amazon. I'd be locking in some profits, wait for a very clear breakout above this August high, and then get it on a retest into that level. But it's basically kind of where it's at right now. So I would definitely be a little bit more protective at this spot here on Amazon, and possibly looking to maybe buy the dip here. But if it gets back below these lows that it put in over the past couple of weeks, Amazon's probably just going to be going lower. And that means we have bigger issues in the marketplace. And why would we have bigger issues in the marketplace? Well, AAPL, the largest stock in the S&P 500, and really by market cap of all U.S. stocks, right? So AAPL had a pretty good earnings. They beat earnings by 5.5%, but it's the revenue. The revenue side came in flat. They actually didn't beat on revenue for like the first time, I don't know in how long, maybe like a decade, but they missed on all product sales. All product sales, except for like small devices like wearables like watch or earbuds and things like that. But they missed on phone, they missed on tablets, they missed on computers and PCs. So Apple did not do the market any favors here and basically kind of offset Amazon's gap up. And you can see just how bad this looks on a daily. And if I throw on the long terms, we definitely have a little bit more room to run now down to that 100 moving average. So AAPL here getting back above that previous all-time high that it put in back at the beginning of 2022. And yeah, you can see it's getting back below that. So we're going to have a little bit of a false breakout here over the past couple of months, really. So you can see that I mean, we've been on a pretty good run here on AAPL, and people are probably going to look to be protective, especially with the Fitch news and it kind of, getting investors maybe a little bit spooked here. Be protective here, not aggressive. All right, take a look here at week over week options change. We had a huge amount of liquidation of options, calls and puts for August 18th. Those are the monthly options for August. So yeah, you can see how much calls and puts really got sold off. And you can see the lines here for calls and puts. And the puts was basically up here around the same spot where September's was kind of peaking out at. So yeah, you can see how much of a big chunk got liquidated this week. But other than that, we did continue to see options get sold going all the way throughout the time periods we got here. August 25th getting sold, September 15th some calls got sold, all the way out to December 15th some options were getting sold. Even January 19th options were getting sold. So yeah, other than that, there was quite a bit of puts getting picked up throughout some of the other months or some of the other expirations. Take a look here. Sentiment survey came up a little bit more bullish. We'll be curious to see what it comes in at next week after we get a full appreciation of the Fitch news. So be curious to see kind of how that reacts here on the sentiment survey. But yeah, nice little uptick week over week on the bullishness there. The rate odds for rate probabilities for September stayed pretty much the same. Looks like it's just going to be a hold. Even for November, odds on going to be a hold as well. Even December, odds on are going to be a hold as well. Not much has really changed. Equal weight S&P 500. I know it's been pushing higher over the past couple of months, but expect it to come into at least these highs. And really, honestly, I would be a little bit more protective. I know I'm going to run through these indices here, but I would be really protective. The Fitch news was really something we didn't expect to get. And that's typically the sign of when the market's going to top out, is when you get some weird, unexpected news that really kind of makes investors think, hey, you know what, I need to be a little bit more protective here. So I can understand buying the dip as the market's been very strong this year, but you just got to be very disciplined with any stop losses that you put in, because that Fitch news very much could have been the needle that popped the balloon. The DIA is going to be pulling back. Look to probably pick it up probably anywhere between 345 to 340. If it gets through 340, I'd be definitely a lot more cautious, probably having some really tight stop losses, especially breaks down these lows from late June, early July, because then it's probably going to be putting in the lows for May in place. So yeah, just be mindful of that. The IWM hasn't really broken down significantly yet, but it looks like it probably will early this next week. We're going to have some lower wicks that will be important, especially the one from July 27th and the one from Thursday, August the 3rd. But if it breaks through those wicks, you're going to have some pretty good support levels to be buying the dip around the 188 to 185 type of area. Okay, the Qs. So we definitely have a switch. Okay, this is definitely a switch. This is definitely something you want to be paying attention to, because we now have lower highs on the Qs and lower lows. So we do have the Qs now trending in the other direction, in the bearish direction. So it has broken the uptrend. And that is coming on when the SPY was continuing its uptrend, okay? So just be very mindful of when this situation happens. That usually signifies major trend changes on the market. Now, we almost had that happen back in mid-June, late June, but we never got that low to get taken out in between the two little highs. But this one, a little bit different, as we do have lower highs but we now have lower lows. So I went back to August 5th of 2011. This is the last time the US debt actually got downgraded. The S&P company, Standard & Poor's, another rating agency, actually downgraded the US back then. And this is what happened, the few days around that time period. So it wasn't a huge face ripper bear move. I mean, there was definitely bearishness. Now, a lot of leading up to it there was some expectations that it was coming, as the US politicians were having a hard time negotiating raising the debt ceiling that week. So it was another one of right to the last minute, and we were seeing the market be bearish before then. The reason why this one is different with Fitch this week has everything to do with, well, it was unexpected. So as we look back at this week, Tuesday, when we got that news and we traded it on Wednesday, it was not expected. We did not expect that to happen. We've already passed the debt ceiling. So that added on with, we've had a very strong move this year on stocks. And even since the October low, we've seen a pretty strong move. I would say it's a pretty good time to be very protective of gains that you have, especially if you've been exposed to tech. So it's hard to say anything for sure, but there's definitely several layers and several different support levels in here as we kind of pull back here. Obviously, the first one's going to be this little double top here, about 3 or 4 points lower as we go into next week. So it makes sense that we probably get down to there early this next week and try to bounce. But if that one doesn't hold, then I think it'll be pretty much, we'll be in the next bearish move down. And 430 will be another pretty good spot as we bounce there back in late June. So we'll see how things kind of shape up here over the next couple of weeks, but reduce your exposure. And if you've been bullish over the previous several months, good for you, but don't be giving it all back, okay? Be protective. So have a great weekend. Alrighty, Alpha Hunters, take care.